Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. Last week, before the ECB meeting, I did tweet out that I believed if the ECB went 75 basis points last week, we could see a near-term top in the dollar. They did go 75 basis points and we did see a sell-off, and it does look like we may be running out of steam in the DXY near term. I do think that the DXY is going to head quite a bit higher, but it does look like it may be topping out near term over the next few weeks, and we're going to go through that in today's video. Okay, so let's have a quick look at the economic calendar, because there are some important macro events going on which I believe are going to determine the next move, not just in the dollar but in markets in general. We did have interest rate decisions out of Australia and Canada last week, pretty much as expected. It's the ECB meeting I want to point to last week as the most important, and this is because I want to paint a bit of a macro picture here for you. We did have the ECB raising 75 basis points, and we discussed in last week's video that that is not necessarily super helpful because a lot of the inflation is driven by energy and on the supply side as opposed to the demand side. However, let's have a quick think about the overall macro picture which has driven the US dollar to the current highs that it's in. We have, up until recently, had a very dovish ECB. We've had US CPI coming out over and above what was expected, so it's coming out hotter than expected, and this has forced the Fed to be very, very hawkish. Those three things combined have driven the dollar to the highs that we've recently seen. And if you look at the recent data and take the ECB meeting last week, we have two of those three main drivers which have started to subside. In other words, US CPI has started to come out lower than expected, and the ECB is now getting more hawkish than it has been previously. The only thing out of those three left is the Fed, which is still being very hawkish. However, if we go and have a look to the data coming out next week, we do have very important CPI data coming out on Tuesday. The last time this came out, it came out lower than expected. And it's actually forecasted to be deflationary, or to deflate, so negative month on month next week. Now, although the Fed, even in the meeting last week after the ECB, remained very, very hawkish, and I think it's unlikely we're going to see them pivot until we start to see very bad employment data coming out. If we do get a negative CPI reading month on month, and perhaps even more negative than expected, this is going to be dollar bearish, and it will be a sign that one out of two scenarios which is keeping the Fed ultra hawkish, in other words, high inflation, low unemployment, one of those two, which is the high inflation, may actually be peaking, rolling over, and this increases the probability of the Fed softening its approach. So just to take this back quickly, we had in the dollar run-up a dovish ECB, inflation coming out hotter than expected in the US, and a very hawkish Fed to combat that. And as of last week, and potentially heading into this week, we may actually see that overall macro picture almost reversing, because if we're going to see the ECB now getting more hawkish, we're going to start to see CPI coming out lower than expected and possibly decreasing, then you may also get the Fed being less hawkish. And this was why I tweeted out, I believe we could see a near-term top in the dollar. And that really is primarily, in my opinion, based on people who are in dollar long positions actually just booking profits. So very important data coming out next week in terms of the CPI data out of the US. I'm going to be treating the US pairs next week essentially as interest rate decisions. I'm going to be waiting for this to come out first, and then I'm going to be looking to potentially trade the US dollar pairs after the CPI data. But as we're going to see as we go through the video, that I think there are actually better pairs next week outside of the dollar pairs. And there's a good chance that I don't trade the dollar pairs at all next week. And the main reason for that as well is that if we skip ahead one more week, you can see we have FOMC coming up September the 21st. We know that when you have these big interest rate decisions, very often the currencies don't do too much the week before or the week of. And so if we have a meeting from FOMC on September the 21st, this, in my opinion, just adds weight to the idea that dollar bulls are going to start to book some profits before this, and this could actually bring the DXY down over the next couple of weeks, at least into this meeting. Okay, so let's have a look at the scores for the coming week. And the first thing to note here is that the US dollar, which was the strongest last week at +3, actually above +3, has now reduced its score to 2, so it is down -1. And although the DXY is strong, the best long signals are when you have a currency with a strong or a positive 1 month forward looking score, which is getting more positive. And we have that this week with the Swiss franc. And the Swiss franc not only sits as the best long heading into this week, but it also has momentum. It's one of the best signs we can get from the scorecards, a stronger currency in terms of its 1 month forward looking probability score getting stronger. The DXY, although it sits in second place, with CPI data next week, with FOMC on the 21st the following week, and with the US dollar shedding a whole point and going from 3 to 2, all of these things make me very wary about dollar positions over the next 2 weeks. And it adds more weight to this idea that I do think everybody who has been in a long dollar position, heading into CPI, heading into FOMC, is probably going to want to book some of those profits, and this is likely to lead to a near-term correction in the dollar. So I will be looking at potentially trading these as news trades next week with the CPI data. We'll go through that when we look at the markets themselves. The next thing to note here is that the euro has actually strengthened somewhat, and now we have the euro and the dollar both in the positive side of the scorecards. What does that mean? This is a sign that market opportunities are drying up, and it's a sign to start to restrict your trading or take less risk. And if you've made some good profits over the last month or so, heading into FOMC, it is a good policy, in my opinion, to look to reduce risk, take less trades, and look really only to trade the best market opportunities or the best pairs, best setups available. So that is what I'll be doing heading into next week and likely into FOMC the following week as well. We do have the Japanese yen weak and getting weaker in the scorecards, and we also have the Aussie weak and getting weaker in the scorecards. So those are two good shorts this week that I'm going to be looking at. And to cut a long story short here, I'm going to be looking at primarily Swiss franc long positions. I'm going to be looking at Canadian long positions vis-a-vis the Japanese yen versus the pound. We're also going to look at versus the Aussie and the New Zealand. For example, Aussie franc to the downside, New Zealand franc to the downside, pound franc to the downside, and franc yen to the upside. And also Aussie Cad to the downside, New Zealand Cad to the downside, pound Cad to the downside, Cad yen to the upside. And on top of that, we will also look at a couple of potential opportunities in dollar pairs on the CPI data. And the very final thing to note here is that the pound has come off of -4 oversold for the first time this week. That does usually, as many of you will know, precede a correction. In other words, if the pound has been very bearish, the first time it comes off oversold usually sees strength following that. Well, if that's going to be the case, that is another sign indirectly that we may see a correction, a pullback in the dollar heading into FOMC. Okay, so let's have a look at the individual currencies before we move on to the markets themselves, starting with the DXY. Now, the first thing I want to say about the DXY is don't confuse a near-term top, which is generally speaking just a profit-taking opportunity, for a massive short opportunity. This is not a massive short opportunity. The DXY as it currently stands is in a full-blown bull market. And what I'm talking about leading into FOMC over the next 2 weeks is the risk of a correction and therefore dollar long positions underperforming. So that really has two implications. If you're already long in dollar pairs, it might be a good time to book some profits. And if you're not long, maybe you should reconsider dollar long positions into FOMC and look elsewhere. That's really what a potential near-term top in an overall bull market is. It's not an amazing short opportunity. I've also left on the previous target that we took out. I don't usually bring these back, but I just left this on to visually show you that all of this is actually happening right at a previous significant resistance area, which the DXY is struggling to get past, and it actually failed to break above this last week. So this is why DXY positions, generally speaking, are off the table. We'll look at a couple down here for the CPI news trades if they materialize, but I think there are better markets outside of the dollar now, and that'll probably be the case heading into FOMC. Next is the euro. Again, not a very bullish chart. In fact, this is a very, very bearish chart, and the overall outlook for the eurozone is also very bearish. And I do think the eurozone is going to head into recession before the US, and I do think we're going to see euro dollar falling further. However, leading into FOMC, the risk is that we get a continued correction and perhaps even a pullback and another retest of the 1.03750. Because this is in a bear market, but it's a bear market which may be slightly running out of steam, especially if the dollar rolls over, this pretty much makes this not a fantastic opportunity in my opinion. Again, I'm not really interested in euro pairs. We'll look at euro dollar. Outside of that, again, I think there are better market opportunities. Next is the pound. The pound is bearish and we do have momentum to the downside. We took out the target here previously and I would not be surprised to see the pound come down and retest these lows. I am bearish on the pound. It does have a score of -3, but because it came off of oversold for the first time and this generally precedes strength, even if this is just a correction near term over the next couple of weeks as the dollar pulls back a little bit, even if that's the case, it makes this not a fantastic short or not as good a short as it was. So we will look at pound franc and I'm going to be keeping my eye on pound CAD next week for short opportunities, but not highlighted in gold because the pound has come off of oversold for the first time. So I think there are better opportunities here outside of the pound pairs as well, even though we're going to look at them. Swiss franc. The Swiss franc is kind of neutral, technically speaking. In the scorecards, it is the best long heading into next week. And if we do roll over the next couple of weeks, or we just correct in the DXY, yes, the euro will benefit from that, but the Swiss franc will also benefit from that. And based on the scorecards, they're telling you that the Swiss franc will likely benefit even more than the euro. That's why it makes it a good long opportunity, relatively speaking. So I am interested in Swiss franc long positions. Aussie franc and also New Zealand franc are two of my top pairs heading into next week. Next is the yen. We did take out the target to the downside last week and yen short positions were good trades. This was something we highlighted in last week's video. They were good trades last week. Coming into this week, I am looking for further declines. We do have momentum to the downside. Any pullback in the yen is viewed as another opportunity to look for shorts into the 0.00677. And this is likely going to take us back into the level which the BOJ started to intervene in the Japanese yen in 1998. When we go and look at the US dollar versus the Japanese yen, we'll discuss this a little bit more. In 1998, the BOJ were approaching those levels where they intervened. However, it is a different setup this time because in 1998, the Federal Reserve actually sold dollars, or they devalued the dollar to help the BOJ intervene in the yen. It seems unlikely that the Federal Reserve is going to want to do that with the current situation around inflation in the US. Next is the CAD. The CAD is technically bearish, but you can see it really lacks momentum here. I mean, if you compare this to the euro, this is really pretty choppy. And in fact, this is kind of bearish to neutral, technically speaking. In the scorecards, it actually has a +2 rating. And if we are going to get a correction in the DXY, the Canadian dollar will benefit from that, probably just continue to bounce from the range bottom down here, maybe even back towards 0.78210, who knows. But this near-term bounce in the CAD is going to favor these markets vis-a-vis the Aussie and the New Zealand, and also the yen. We're going to look at the CAD pairs after the franc pairs as some of the best opportunities in my opinion next week. Aussie dollar, we came very close to the target, and after breaking this head and shoulders we've discussed, we basically came back and retested this. I am looking for this to continue down to the target and further. Aussie is one of my favorite shorts next week. And finally, in New Zealand dollar, we took out the target at the 0.600, and it may continue to correct a little bit if the DXY does sell off. However, I am overall expecting this to come down further, and New Zealand is also one of my favorite shorts heading into next week. Okay, so let's have a look at the markets heading into this week, starting with crude oil as we always do. Last week, crude oil was highlighted as a good short opportunity. I did in fact short crude oil last week. We took out the target, and then we started to reverse down after the ECB meeting. Heading to this week, I do think we're going to come down further in crude oil. It does strike me that we have a long sell-off here, followed by a shallow correction, followed by another move down, and now this is deep. So I wouldn't be surprised to see this even continue higher, which is actually great. I like these kind of setups because these do provide better opportunities to get short into the target, better risk to reward because there's more distance to the target. So look for crude oil to correct, and I'm going to be looking for any breakdown like this in crude oil out of its correction, out of the near-term uptrend, which is corrective move. Any break lower, I'm going to be looking for pullback, and that's going to be the opportunity to look for shorts once again into the 80.62. So I do like crude oil, but may need to correct a little bit first. The first Forex market here is Aussie Frank. This is my favorite market heading into next week. We do have a head and shoulders breakout over in this area, and we have started to decline. We're now setting up a potential bear flag, so any continued correction in this area is viewed as an opportunity to look for a breakout. I'm going to be looking down towards the next key area support to the downside and the target set at 0.6487. Next is New Zealand Franc. This is my second favorite pair heading into next week. We did take out the target set previously at the 0.5904. Heading into this week, we are approaching the target. So what I would like to see is I'd like to see the market pull back, and any continued correction in this area is going to be viewed as an opportunity to look for shorts in New Zealand Franc down towards the next key area support to the downside and the target set at 0.5838. Next is Franc Yen. We took out previous targets here in Franc Yen, and we finished last week right at the target of the 148.120. This wasn't added in last week. We looked at US dollar yen, and this actually mirrors essentially the move and the ending of the second target we saw last week in US dollar yen. We'll look at that in a bit. Going into this week, I am still bullish on this market. You may be asking yourselves, well, Franc was the strongest pair and the Japanese yen was one of the weakest, so why is this not higher up in the list? Well, the reason is because the move so far has been so steep that we may get a bit of more of a correction, or we may get a little bit of a deeper correction, which may take a week or so. So this is why I prioritize, instead of the Franc Yen pair at the top, Aussie Frank, New Zealand Franc. And it's also why I prefer Aussie Cad and New Zealand Cad next week over Cad Yen. It's just because we've already got so extended here, I wouldn't be surprised to see this correct, maybe even for a week. But any correction in this market is simply viewed as an opportunity to look for bullish breakouts. And if the market starts to correct and then we get a breakout, I'm going to be looking at initiating longs up towards the 151.83. These markets, the Japanese yen markets I'm talking about here, have kind of got a little bit out of hand because you can just see these markets are just moving almost like a stock. I mean, this is a currency and this is moving like a stock. And there is risk of intervention in the Japanese yen. So my advice would be, as it currently stands, if you're looking to trade yen pairs, better to trade them with wider stops, a weekly ATR, perhaps even 2 weeks ATR, because then if the BOJ does intervene, you're just going to get stopped out at your stop. You're not going to lose any more than that. If you take large positions in the yen pairs and you take them with very tight stops and the BOJ intervenes, you are unlikely to get taken out at your stop. You will get taken out past your stop because it's a fast market. You'll get slipped, and that slippage could end up costing you even 2 or 3 times the amount you've initially risked, depending on how tight your stop is. So if you are looking to trade the yen pairs, my advice would be to trade them with wider stops. Next is Pound Franc. Pound Franc was a market we looked at to the downside last week, and we came right into the target of the 1.11190. This was a great short from last week. Heading into this week, any pullback in this market is viewed as an opportunity to look for bearish reversals down towards the next key of support to the downside and the target set at the 1.0863. Now, this is another market like the yen pairs where when I look at these key areas of support and resistance, there's just nothing but air, these huge gaps between the levels. And so if you want a more conservative target, you can look for the 1.1000 next week. It may take a couple of weeks to get down to the 1.0863. Not highlighted in gold here because, as I said earlier, the pound has come off of oversold for the first time. So yes, I'm looking at this as a short, but there are other markets here I'd prefer to be involved with. Okay, so the next pair we're going to look at is Aussie Cad, and this is looking at the Cad pairs here. I do prefer the Franc pairs, but any pullback in this market heading into next week is viewed as an opportunity. We've already pulled back somewhat. It's going to be viewed as an opportunity to look for bearish breakouts. Maybe we take out the top and we get a double top like this. That scenario would be an example of where I'd be starting to look for shorts down to the next key of support to the downside at 0.8735. Next is New Zealand Cad. We've already started to form a bear flag here, so any continued pullback in this market is viewed as an opportunity to look for bearish reversals, and any break lower is going to increase your odds of this market continuing to the downside. So any break lower is viewed as an opportunity to look for a pullback, and I'm going to be looking at shorts into the 0.7816. Next is Cad Yen. We previously took out the targets and we're sat here at the 109.65. The room to the next target again is ridiculous because of the amount of volatility we have now and also in the past. So any pullback in this market is viewed as an opportunity to look for bullish breakouts. So we correct like this, and then you see some momentum coming in. That's your opportunity to look for long positions into the 114.58. This is very unlikely going to happen next week. So if you want a more conservative target, I'd be looking first up to the 111, and you can actually work your way through the psychological levels here into the 114.58. And the final Cad pair we're going to look at is Pound Cad. We are very close to the target, so I'd like to see one of two things. Either we pull back and we start to form a bit of a sideways correction like this, and this would be the opportunity in this area to start to look for a bearish reversal. And if you start to see that breakout, I'm going to be looking down towards the 1.5002. If, however, we take out this target and then bounce, I'm going to be looking down towards target 2 at the 1.48310. Again, this is an opportunity, but this is not one of my favorite. In fact, out of all of these, this is my least favorite market to look at next week. And I'd much rather trade Aussie Frank, New Zealand Frank, for example, than Pound CAD next week. Okay, so we're going to finish by looking at the dollar pairs as potential news opportunities. But just bear in mind, I'd be more than happy not to trade the dollar pairs at all next week. If you wanted to trade the dollar next week and we get a better than expected CPI print, in other words, it comes in, let's say, at minus 0.1, which is what's expected, or lower, this would be bearish for the dollar. It would increase the odds of that correction into FOMC. So if you really wanted to short the dollar, even though I don't think it's a great short because it's still +2, but if you wanted to short the dollar, I would be short the dollar versus the Swiss franc, because if you're going to short a currency which has a positive 1 month forward looking score, you'd better short it against a currency which has an even more positive one, because that's your best opportunity at having that currency decline. So any correction in this market, perhaps into CPI, and then you get the CPI data come out and you get momentum like that, look for a correction afterwards, and then you can look down into the 0.9470. That would be a news position I'd be looking for if we get dollar weakness from CPI. So just bear in mind, the first market we're looking at here is on the basis of a dollar sell-off because of CPI. Okay, so the next $3 pairs we're going to look at here are all based off of dollar strength following CPI. So you have a number of opportunities here whereby if CPI comes out and causes the dollar either to rally or to sell off, there are a couple of markets here you can look for opportunities in, and you might get some opportunities post CPI in one of these markets. So dollar weakness, I'll be looking towards US dollar, Swiss franc to the downside. If we get dollar strength, then what I'd be looking for here in Aussie dollar is, if you get that dollar strength and you see the Aussie dollar selling off like this, look for the pullback post CPI, and that will give you an opportunity to look for shorts into the 0.6684. Euro dollar, if we do get dollar weakness, I will just leave euro dollar because this will continue to correct like we were talking about at the beginning of the video, probably into FOMC. But if CPI comes out and causes the dollar to rally and you get the breakdown like this in euro dollar, this would be a market you can look for post CPI for shorts into the 0.9860. And the final dollar pair is US dollar yen. This was a market highlighted as one of the best opportunities in last week's video, and this was a fantastic long opportunity into the second target, and then we started to sell off from that level. So going into this week, if what we see is the market correct into the CPI data, and the CPI data next week causes the dollar to rally, this will again be an opportunity to look for any pullback after CPI data, look for a move into the previous high and then onto the 147.67. The 147.67 was the level at which the BOJ intervened in the yen to prevent it from weakening any further in 1998. So as you get to the 147.67, the risk of BOJ intervention, in my opinion, increases. And again, I reiterate, one of the ways to safeguard yourself or soften the blow of that if you are involved in these markets is to have wider stops. So a weekly stop based on a weekly volatility or weekly ATR or 2-week ATR. Okay, so wrapping up with gold, silver, and Bitcoin. The gold-silver ratio is really kind of neither here nor there going into this week. I do think gold continues to outperform silver over the longer term, but right now, I would say there's not too much of a difference between whether you're long or short gold or silver. Next is gold. I've highlighted gold in blue to remind you that this may actually correct into CPI on Tuesday. So don't be surprised to see gold, silver, and maybe even Bitcoin doing nothing, and the dollar also doing nothing into the CPI event on Tuesday. If on CPI you get a break to the downside, which is dollar strength, that would be an opportunity next week to look for shorts into the 1676.87. Next is silver. We did have a very shallow correction over here, and now it looks like we're getting a much deeper correction. So all of this really makes sense in terms of a correction, and I would only really be looking at trading this next week if we get the market continue to correct into the CPI data, and then we get a dollar strong move, in other words, a dollar rally that would be a sell-off in silver. Then you could look for a pullback and you could look for shorts once again down to the low or onto the 16.96. If you get the dollar selling off or weakening from the CPI print, this is likely to break higher, and I would just leave gold, I would leave silver, and I would leave Bitcoin next week. If you get a sell-off in the dollar from CPI, I would just look at these markets instead. And last but not least, we have Bitcoin. Now, we had some strong momentum coming into Bitcoin, but if I switch to a daily chart here, what's interesting is Bitcoin may be one of the keys to show us what's coming in the dollar. I have discussed previously that this is a bear flag. I am looking for further declines in Bitcoin, and it did look like once we broke down from here, we were going to start the next leg down. It does now look like with this momentum, that is not what you tend to see in a bear market. That is indicative of perhaps a B wave in a much larger correction. And if this is the start of a C wave and we're going to come up over here, you can trade Bitcoin counter trend if the dollar sells off, because we may be coming back here to the previous low. Remember I said previously I was looking for this previous low. We just missed it, and now it would make sense if actually that was because that was an A, a B, and this comes into being a C wave. So I'm not a big fan of trading counter trend, but if you wanted to trade Bitcoin counter trend on a weak dollar off of the CPI print on Tuesday, that would be what I would prefer to do. And I am looking for a potential C wave now into the previous low. And I think this could actually also be the inflection point where we see the dollar start to rally once again, where we see stocks start to sell off once again. So keep an eye on Bitcoin, because this could be the indicator of the next turning point in the dollar and also in stocks, if we can come back and retest this with an A, B, and a C before the next leg down. So that is it for me for this week, guys. Remember, CPI next week, following week FOMC. It's likely to be a tough 2 weeks in terms of trading. Market opportunities are probably going to be harder to come by with the dollar if it is going to correct and have a lack of direction leading into FOMC. So I am going a bit of a capital preservation mode, looking for the best opportunities. I'm going to be taking less trades. Even if I only take 1 or 2 trades next week, that's fine. If they're the best markets, you don't need more than 1 or 2 trades each week to make money. So as always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely. Thank you.